Hello traders, this is Alex Andreessen with the Top Step. I am the voice of the Top Step audio broadcast. Today's topic will be soybeans. This is April 25th, 2009, and this will be the weekly topics that we cover. Let's go to the bullish consensus numbers. Now these are as of Tuesday. Of course, next Tuesday here we'll have new numbers. Again, bullish consensus. Basically, they take a consensus of the people, the traders, every week, and the more bulls, the higher the number. The less bulls, the lower the number. Not a very practical trading tool, but it is just another tool in the chest to give you a potential possibilities of maybe some longer-term events. And the RAS rally has caused this to push up into a little bit higher number, and you got to respect that and be a little careful. Let's go to the daily chart in the July soybeans. This is trend lines. These are parallel. And again, I'm trying to find a pattern, and there's a pretty good pattern here. A couple of them that emerged. These are market days, and if you've ever followed me in the past, you know I love 11, 22, 33, 66. I love this sequence, and it happens to be falling in place here, especially in the soybeans. But anyway, 19 days over. Was this low back in 08, 36 congestion, 42 low, 66 high. In the same pattern that I'm looking at here in March, from this low, 19 over was the low, 36 congestion, 42 will be April 30th, 66 will be the first week of June. So again, a possible pattern match. The key will be Monday or Tuesday if we break or not, to see if it will continue this move. If not, then we'll turn into this move. This is 33 days up, which was the secondary high. 33 day up, currently on the high. If we break through this and start traveling down, this is probably a top. Now, I mean a top. So if that's a top, that means we're going a lot lower. We're going to make new lows. So we'll probably see some prices that farmers won't be too appreciative of. So again, hedging here is pretty crucial. You might be on the horn come Monday and call your elevator if you start seeing a break a little bit, or call me and we'll buy some options. But anyway, 66 days over was this high, and this is just a cyclical count from there. You can see this gapped acceleration down. This was a high. This was a high. And with this, 33 kind of matched up as a high. So again, the math is here. It's been working really well. Actually, when you got this kind of volume, the mathematics work really well. And I could go on and give you a whole seminar, but I'll get moving here. We want to move on to the weekly chart. This is again squared of the range, and again, this is one of those charts where, if you followed me, I was kind of projecting this high laughingly because I didn't think it would ever get there back in 07 when we started this move, because this low was in sequence. I can draw this. This is 6 cents per 1 day. And the speed was indicating a $16 plus $16.50 price already back in 06. Of course, I didn't believe it. Obviously, I would have been not talking to you right now. I'd be sitting in Bahamas. But again, that's the difference of forecasting and trading. But again, it did come into play. The main thing on this chart, I won't get into too much, is this 50% level we're back against. And from here to here, 33% level back, or 1/3, is the same as this 50%. So we got a dueling banjos here. Halfway here, 2/3 or 66% back up is also up here. My guess is this area here will be pretty tough to get through. If we haven't made the high already, this will be the zone somewhere in here of a high. Now that's a big zone, so take it with a grain of salt and read the disclaimer down here. Let's go on to the next chart. Oh, let me get over here. This is the commodity index trading. It's from the CFTC. Now they just do the ag stuff temporarily. Hopefully they do them all at some point. But anyway, this is the beans. This is the index funds. This is all the hoorah-rah that happened and all that made the press. But what a big push. Holy smokes, man. These guys put the wood to something. Problem is, it was reverse pyramid. They bought 1, 2, 4, 8, 16 32, 64. As the public got and wanted in their stock, ag stocks, they kept buying more and more up here. And then once the market broke, most of these people on this break were already at a loss. Problem is they didn't know it till they got their quarterly statement, which was here. And then all the redemptions occurred, and the index fund just took a bath. Now they have moved up and caused this market to go up. So they're back in the saddle. The problem is though, the margins are just as high now as they were here at the highs. So the margins haven't backed off at all. Now there's also the short funds. Now they don't have near the numbers, actually one less digit, which is huge. But you can see that they've been adding to their shorts. So a little bit of a battle there between the fund longs and fund shorts. Let's go to the CFTC numbers, the actual numbers. And this is on my website that I do every day, which you can visit at cotlive.com. Well, that's under construction actually. It's still wdmatrix.com, but I'll be moving that over to COT Live here in a month or so. But anyway, this is just all the data and record highs, record lows. Right now we're currently at 361,793. Actually, there's new data that came out this afternoon. I haven't updated it yet. This is actually last week's, but you can see that we're at a 7-week high. So I imagine with the beans being up, we probably made another new high for the last 7 weeks. And you can look through that data and revisit this, or go to my website. Now here's the chart of the data that I break down, and again I have 30 years of the data. I just show you a little bit of the portion, but here's the battle. This is my website in a nutshell. This is the fund longs. In my opinion, the fund longs have everything to lose. They're not hedgers, so they're basically speculators with a lot of money. And so when they get nervous, they do stupid things, and when they get bold, they do crazy things. And again, this whole website is to follow the trail of the money, and this is it. If you'd have been following this data or my website, you would have not been short. Obviously, the fund longs are the blue, and they've been buying, and the fund shorts have been actually bailing out on their positions, getting out. So when they get out, that means they got to buy. So it's a doubly push. Okay, and that's why we've went up $1.50 here in a very short period of time. This chart picked that. Obviously, if you'd have been trading them back here, you would have seen that the fund longs are bailing, getting out. Now, again, they're speculators. Commercials, on the other hand, they don't speculate too much. They're more hedgers. But boy, Cargill got fried back here in 07, man. Them guys about had to be broke. I mean, that's 400,000 contracts times 5,000 bushel times $16. I mean, you do the math on that and let me know what it comes up to. But it's your calculator won't figure it. You'd have to go to a computer calculator. Specs are always about the same. Now, you catch an anomaly every once in a while. This is just the volume. But here's another one that's pretty important. This is the contract value. Again, 5,000 bushel times the price times the open interest. I had to divide it by 1,000,000 because otherwise the numbers would be way out to here. So, but you can see that the market just got absolutely pummeled. I mean, we went from 5 million times 1,000,000, and here we are down here. So what a change, a big time change in dollar. That's dollars. But well, I'm going to take off here. This is Alex Andreessen signing off from Salina, Kansas. Give me a call, 785-825-5102, or visit my website, www.cotlive.com.